Well, hello, traders and investors. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets. We're doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts. We're using that information to make decisions about trend, which way to point, timing, when to get in, when to get out. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little, and if you want to subscribe to the show, just reach up in the right-hand corner anytime I push content. You get a notification. Now, I was out most of the day, not in front of my monitors. We had a nice big red day, down over 1% in Europe. Cut our losses from 1% plus to about 0.75% elsewhere. Gold and silver were up. Outside of that, it was all red. Russell was the laggard, and that has been a common theme here of late. Let's look at the indexes and see what we got. We'll start with the S&P 500. Let's grab that and pull that up. And bear with me while I get my bearings here. So the S&P 500. So what do we have on it? The S&P pulls DAC down, and now it had broken out. And so the first thing you look at when you see a breakout is you look to see where it broke. And so the break was here. So what does it do? Well, it does actually what it should do, and that is it gets down and does a full retest regen into the bottom third of that retest regen area. The volume on it, the volume on the breakout bar, which is greater than the volume on the swing point bar, says, hey, that's a nice retest. This thing's going to try to regenerate. So that actually says going to try to push right back up and again. And so you kind of got a little hammer type reversal. It's going to try to push higher. NASDAQ Composite, same thing. You don't have the retest. You didn't get 6 bars. You had 5. But essentially, you come back into an area which was the congestion, right? Which kind of serves almost like a swing point. Just didn't quite print in the model. Get over it. You get a breakout. You get less volume. That also looks like it wants to bounce tomorrow. NDX, let's see what it looks like. Same scenario, actually just a little bit stronger. And the NDX, of course, is the one that has been leading us up. Now remember, you got all the big earnings starting with Apple tomorrow in that NDX. You got 3 big ones, Facebook, Amazon, Apple. Those 3 are going to be the tail of the tape this week, along with the exogenous type fundamental stuff out of these central bankers and potentially whatever happens out of the Oval Office. Which is becoming more and more interesting. So what we got here, Russell. Now the Russell is a little bit different. The Russell can't get out of the way. Now remember, the Russell is the one that pushed us up. It had the best tail on the way up. Now the Russell is not giving us the signals that this thing's going to move higher. Matter of fact, this one, there's a test, another test. Here's a third test. You could actually call that one a test. Well, not really, because you were still in the test. So I won't give that one a test. You got 3 tests. What happens on the third test? Well, your probabilities go down into the 35-40% area. That says that this thing has a decent chance of breaking now. Where can it break to? Well, you got to look elsewhere to see that. Let's go to the weekly. See what the weekly looks like. Let's pull that in. And so the weekly got this big. You got this big swing point highs low. 13.15 it looks like. Let's go back to the daily now. 13.15 takes you into these lows, and that looks like a logical place. That's where your volume, the last time you had volume. So Russell looks to me like the Russell can pull back farther, and if it does, it's going to put some fear probably elsewhere. And if it's anything like it was on the upside, it's going to lead to the downside, right? And it's going to bring the other guys down. So we have bounce set up just looking at the indexes tomorrow, but the Russell is kind of a question mark, and so we have to at least give that some consideration, if nothing else. Let's go look at the, I want to look at those big 3 cap stocks, Amazon, Apple, and Google. Let's start with Amazon here and see what it looks like. Okay, so Amazon on a daily just does just like we saw in the index, pushes back into an area, the last congestion area. Now you get a little push back up. Let's look at the weekly. All right, now here's where the problem is. If you look at the weekly, you got this bar, which was the breakdown bar. That's where all the volume was on the way down, right? Now you're coming back up. You got no volume, and what do? You test. And I don't know if it actually tested, but it got pretty close. 843.09. It did. Got over it, back under it, less volume. That's a test failure. Now, of course, you got earnings, and it's just hanging. But this is a dangerous setup, right? You know, it may just blow it away and just keep going, but that to me is not something I put a lot of money on. Facebook, let's see what that one looks like. Okay, exact same setup, right? You come back into a swing point high. You're also coming back into the last congestion area. Everything looks kind of like the same here. I don't see much different on that perspective. But if we push it over and we look at it on the weekly, you got exactly the same case here, right? You come down with a big wide price spread, high volume bar. You go back up, you test with nothing, right? And these weren't high volume. I mean, here's some high volume over here, but they're decent volume. Facebook also looks dangerous to me. I mean, those setups I do not like from a long perspective. Apple, same thing, right? Comes back into the last congestion area, and on the weekly, Apple looks okay. Let's go to the monthly, see what the monthly looks like. Here we go. So we got the exact same setup, but you got to go to the monthly to find it on Apple. Here's Apple. There's your swing point high. You're coming back into the big bar down. 122.57. The swing point high is 123.82. What do you get to? 122.44. It looks to me like Apple is going to try and trade back down too off of earnings. So we got all three big cap techs wanting to trade back down off of earnings. That, folks, is going to put a little volatility into this market. Add that to the Russell, and you'll get what I've been telling subscribers, members of the community here. And that is that this market, you're going to have to change your tune a little bit here if you're going to play with this market at this point. Things are changing, folks. I'm going to leave it at that tonight. I'm running out of time. I'll see you next time. Have a great one. Take care.